What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY and some very important things that will affect the market. So I want to break down some of the hypothetical situations that could end up playing out, considering that CPI is coming out in just a couple of days. Now, before I break anything down about it, before I talk about why on earth there is still an increased probability of there being some downside, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks. And the best part is you'll have free level 2 data, and you'll also have $0 commission trading. So now I want to break down something else that's very important. Looking at SPY, this thing is a little bit green. We barely got a small pop at the end of the day on Friday, but now when you look at the overall chart on the daily, we did get a bearish crossover on the MACD. This is telling me that momentum is slowing down and favoring the bears, but this could change depending on CPI. Now, one thing that's worth noting is when we zoom out of the chart and look at the previous peaks relative to this one, the MACD is actually suggesting that there is a divergence right here. We could see right here the level in which we saw the signal lines leading did actually respect a bit of a downtrend during this peak relative to this one. So there is a bit of a divergence. It's not really that big, but we did invalidate the divergence on the RSI. However, on the VIX, we still have a bullish divergence that developed right here. The VIX made a lower low. I know it's a little hard to see. The VIX went lower. You can see this lower low that formed, but the RSI formed a higher low. And so did the MACD. This is telling me that, once again, bullish divergence is suggesting we're going to get a breakout, and we do have a bullish falling wedge that developed on the VIX. This is suggesting that the market is likely going to see some downside, which is going to cause implied volatility to go up, and the VIX should get a pop relatively soon. So now I want to go over some important things in the market. I'm going to transition into TradingView. Looking at some of the big sectors, we could see that consumer services were quite red for the day. Retail was a little bit red. Amazon was kind of down, but the other ones were pretty flat. And we did actually see some tech stocks that ended up being quite red as well. So tech was not leading the way, and that's often a sign of weakness. All right. It's important to note this because typically when there's a strong trend, the QQQ is what is outperforming, and now it's not actually doing that. So just wanted to note that Nvidia is starting to slow down. Apple was just barely green, and we actually saw Tesla see a bit of a slowdown. Now, Tesla's a bit of an exception because what's interesting about it is this thing was rallying very, very hard. So it is due for a pullback. So it's not the end of the world, but the real question is it going to be a big pullback or a small one? We're going to actually talk about that. So right here, I'm going to try to keep this chart simple. I don't want to overcomplicate it. I have a Fibonacci retracement from the high, the all-time high going all the way down to the October low. And then we also have these two trend lines. I'm just going to keep as few as possible. Once again, trying to keep this simple and break down what's likely going to happen. Well, the first thing you have to remember is we should always be prepared for the unthinkable, meaning there's a possibility, as crazy as this sounds, there's a possibility, and even though it's very unlikely, there's a possibility that the market will kind of trade sideways approaching CPI, then CPI comes out, and we continue with the rally. That is still a possibility. It would be super unexpected if CPI is low, right? And this thing can continue to go to these high levels. Now, is that likely to happen? And then we could slow down maybe later on. Is that likely to happen? I don't really think so. I think it's very unlikely that this does end up happening because the rally is showing signs of exhaustion, but I just want to prepare you just in case. Now, this is one of the most unlikely possibilities of continuation of the rally. What I think is more likely to happen is the market might try to push up a little bit the day before CPI, try to go back to this like 410 level, maybe it'll come very close to it. And then I think CPI is going to come out, and my guess would be that CPI ends up being a little bit hot month over month. All right. And that's going to likely cause some downside. And I believe what's going to happen pretty fast is SPY is going to just take a big hit and start retesting this trend line. And then we have Fed speakers after that. If the Fed speaker starts saying that there's an increased chance of a 50 basis point hike and things like that, we could see the market come down even lower and break below this support line that was forming from right over here. And then we're going to get a retest of the descending broadening wedge resistance. So see this white line. I know I can't zoom out, but the white line that's here, that's going like this was basically the resistance that was holding us down in 2022. We might try to test this and get to about this 390 level, maybe come a little bit lower pretty quickly. And then what's going to matter would be the next CPI. And we could try to bounce off 390. I think that's going to be a key level. If we fail to bounce around here at this 390 level, then we could come all the way down to even lower levels. But it's going to depend on the next report and also on the Fed. But I do believe we could come to 390 pretty quickly. And I do apologize about the background noise. I'm actually in a completely different area near a hotel. But anyways, I'm going to still try to get this done with. I just want to note that it's very important to watch this level because now we could break back down into this like what people consider bear market territory. I wouldn't necessarily say that. It depends on if we're above the 200 EMA and things like that. But I'm not going to go into the full details. Like I said, I want to keep this simple. So we could come down to 390 if CPI is bad, and if the Fed continues to be hawkish going into March, we could continue to come down. I want to note that there's a gap on SPY. I think it's very close to the 370 area. We could ultimately approach that gap depending on the next report and what the Fed is saying. And if the Fed keeps hinting at a 50 basis point rate hike, that could be our target approaching the month of March, coming all the way back down to 370. Now, if the Fed ends up coming out or if we fully price in a 50 basis point hike during the March CPI, it could cause a reversal. If the Fed ends up announcing a pause or they say there's only one more hike for the rate hikes, or if they even give us like another 25 but tell us that they're going to keep giving us more 25s for a longer period of time. All these things are hypotheticals. They're all possible. And what it's looking like to me is I don't think we're going to break to new lows just yet. We could actually come all the way down to about 370 in like one of the worst possibilities. But this could change depending on data, the Fed, panic, and other factors. So I just want to note, I'm not promising anything. I'm not saying we have to like fill the gap down here or we have to go to new lows to like 320. Even though it is a possibility, as of right now, it seems a little less likely because the market is priced in a lot of things and the market is still, very different from before. Now, if something really bad happens, if there's bad news that comes out about the economy, the Fed continues to talk about pain, or they change their narrative a bit, that could drag us down a little lower too. But the most likely thing is we come down to like 370, and then we try to get a bounce again around this area. And we might make a change depending on data. Now, if the next CPI comes out super hot and the Fed becomes even more hawkish, it could spook the markets and we could come much lower. But I'm just talking about the first CPI report, the fear that could come from it, and also the Fed. That's all I'm factoring in this forecast. If the next ones are worse, we could go lower. We definitely could. But as of right now, it's looking more like this would be the most likely possibility. And the market might just continue to chop like a kangaroo market, right? Before we start to see another push up, something like this. And then the real question is, when are we going to see the big crash? Well, it is possible that this could actually lead to like the big crash. We could just come all the way down, even though it's less likely as of right now. It could still happen. But what could cause the big crash is people running out of credit going into the later months. Maybe after summer, there could be an after summer crash that happens as well. Maybe the market continues to kangaroo a bit, and then as we approach the end of summer or later into summer, the market gets the real crash. That's also a possibility, and that would be because of the credit markets and other factors. Or this could be the big crash if there are other factors such as a second hot CPI. If the January data is hot, then the February data is hot, and the Fed is even more hawkish, yes, we could probably come even lower. Like I said, still is very possible. But I just want to note that when it comes to the downside, we shouldn't expect it to come all the way down to like 300 a share for SPY in one move. We might try to get a bounce off 370 first, and then we'll kind of go off of there, right? It depends on the other CPI reports. It depends on other FOMC meetings. As of right now, based off just this CPI report and maybe how the Fed would respond, something like this seems likely. This could be adjusted, but I just want to note this seems like one of the most likely things. Maybe if we fail at 390, then yes, we could come all the way down here. But if we bounce at 390, it could change. But I do believe this is the most likely thing to happen. Many people probably won't expect it, but I just wanted to put this out there, right? Something like this. So anyways, that's what I have for this video. I hope I brought some insight, and I want to note that nobody knows exactly what's going to happen because we have one CPI, then we have another CPI, then we have the FOMC meeting, right? So many things are going on. There's also global situations involving tensions between the US and China. Do not forget about that. There's so many things going on, all right? And I do believe uh, could we be forming a giant head and shoulders? I mean, that's also a possibility. Like, could this be like a left shoulder? Then this is the head. We're going to come down here, get a bounce. We form the right shoulder, and then the crash comes. That's also a possibility, right? Who knows? I mean, it's very hard to predict. What I do want to say is the most likely thing, though, and what is most likely going to happen is a move like this. Where is my rectangle? What? Basically, the market coming down all the way down to either 390 or 370. Either one of these is very likely. And I think this is like most likely what's going to happen. I don't know where it will like bounce off of. The fib levels are telling me around like 370. That seems most likely. We could see a move like this. That's what I'm basically eyeing as of right now. So please watch this part very carefully. I do believe there's going to be more downside to come. I think it's most likely the truth that CPI is going to trigger it. And if 390 fails, 370 could come. We could come all the way down there. So just be ready. This could be forming a giant head and shoulders to trick lots of people. Do what you have to do and get ready for CPI. I don't know what it's going to cause. I'm prepared for both possibilities, but I will note something. All right. We're most likely going to see downside in the markets based off technicals. That's what they're telling us. I want everyone to be prepared for that. All right. Thank you all for listening. Have a great rest of the day. Enjoy your weekend. I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright. And peace out.